Thank you very much. The gentleman's time has expired. The gentleman from Kentucky, Mr. Barr, is now recognized for 5 minutes.
Good afternoon, Chairman Powell. Good to see you. Thanks again for your leadership. I want to, inflation is the topic of the day. I want to talk a little bit about timing and communication of normalization with the backdrop of accelerating inflation. And I understand your position that some of this is transitory and supply chain bottlenecks that could work itself out. I also recognize the slight change in the inflation targeting framework that you're working under. But I do worry that if inflation expectations continue to rise, regardless of these supply chain issues that resolve themselves, that you could have a self-fulfilling prophecy and inflation could get away from the Fed. So my question is, given the fact that the FOMC has committed to communicating any shift in the pace of asset purchases well in advance to ensure market stability and clarity for market participants, I worry that these movements in CPI and other inflation metrics in recent months have proven to be pretty rapid and significant. Is there a risk of upward price pressures outpacing the Fed's preferred timeline for communicating adjustments in its balance sheet policy and when you start the tapering process?
No, there's nothing in the guidance or in our framework that would prevent us from doing the right thing at the right time.
Okay. So you do not believe that inflation could move so quickly that the Fed would be forced to make asset purchase adjustments or even increase the Fed funds rate precipitously without the requisite communications runway?
That's a separate question. I'm just saying we can deal with whatever happens with inflation within the context of our framework and within the context of our guidance. I don't expect the outcome that you're talking about, which would be very surprising if something like that happened, where we really had to move very quickly. It doesn't tend to work that way, but I think we're in a good position to move as is appropriate, no matter which way things go.
You probably saw, Chairman, the Wall Street Journal article today. Higher inflation is here to stay for years, economists forecast. What do these economists have wrong that the Fed has right? In other words, why is the consensus at the FOMC that, maybe with the exception of Mr. Kaplan with the Dallas Fed, that this is transitory as opposed to a sticky inflation? Why are these, in your judgment or the FOMC's judgment, why are these economists wrong? And speak to this issue about the self-fulfilling inflation expectations and why that's not a concern.
Okay, I'll come back to that. But I don't have that survey in front of me, but I think that you can correct me here, but I think that the median estimate for inflation for 2022 was in less than 2.5%, which would be, and that's CPI, or maybe it was PCE, I don't know. But that would be much more consistent with our framework than with what our critics are saying. That would be very much in the range of what FOMC participants are expecting, or at the high end of it, but within that range. Okay, so I think that's what you may have in front of you, Congressman. I don't know. I don't have that.
So here's what we as members of Congress are hearing, and I know you get this data and also anecdotal evidence filtering up through your district banks. But I just spoke to the Chamber of Commerce in Central Kentucky at lunchtime today. This inflation concern is real. It's not just that lumber prices are up and the home builders are upset, and it's not just that the fixed income seniors are upset because the price of food is up and the restaurateurs are having to pay more for the price of food. And the trucking companies and the commuters are having to pay more for fuel costs. We're hearing that according to the NFIB, 47% of small businesses raised average selling prices in June. That's the highest since 1981. I hope this is transitory, but I hope the Fed is hearing the same thing that we're hearing.
So we are. We have this, as you know, we have a great network through the reserve banks. We hear that through a loudspeaker every day. We're absolutely hearing that. Let me get back your earlier question, if you want. I can go back to expectations.
Sure.
That is absolutely the thing we monitor carefully, and we don't see problems on that front. But if expectations do move up in a way that is troubling, which is to say materially above and for a persistent time, we would be concerned and we would react to that.
I appreciate your vigilance, Mr. Chairman, and I yield back.
Shepard Smith here. Thanks for watching CNBC on YouTube.